high oil prices might be a good thing for this economy. High transportation costs could help bring back the Made in the USA label and force companies to rethink globalization, rethink exporting American jobs. Here now, Naomi Klein, author of The Shock Doctrine, The Rise of Disaster Capitalism, and Jagdish Bhagwati, Columbia University professor and on the Council of Foreign Relations as a senior fellow. All right, pleasure to have both of you with us. Naomi, I'd love to begin with you. I mean, obviously, there was a very interesting analysis in the New York Times this weekend where they did go through a lot of companies that have actually been taking jobs that they'd moved overseas and bringing them back home because it's just too expensive to ship stuff around.
Yeah, exactly. We've been living through this period where multinational corporations have been acting as if geography doesn't matter, as if it doesn't matter that there's a massive ocean, huge expanses of land, because it was so cheap to transport goods, whether by boat or by truck. And then they also were counting on consumers being willing, if you think about a company like Walmart or any of the big boxes, they're counting on consumers being willing to commute for 40 minutes to save a few dollars. So the transportation costs all across the board for the planes, for the cargo ships, for the trucks, and then for the consumers, it all adds up. And I think Walmart is still offering lower prices, but those prices have to stay low enough to factor in all of these other costs.
Professor Bhagwati, it is an interesting theory, though. Some of the examples given, I mean, we've had BMW plants open in this country for the first time. Part of that, of course, is the euro. But IKEA and all sorts of major industrial companies have been telling us that, well, we're making this stuff closer to home because the shipping costs are way too exorbitant.
Yeah, it's true and false. If transport costs just happen to increase, that's clearly true. That's acts like a tax on international trade. But when oil prices increase or energy prices increase, you also have production costs increasing. Wherever you use energy in order to produce, and the differential in production costs between countries, which leads to international trade, that differential may increase more than the cost of transportation, and therefore you may be opening up a whole lot of trading opportunities. So I think it's a little naive to simply go focus only on transportation costs. Mm-hmm. And so, nobody can tell in which industries you'll see an impact. But just focusing on transportation costs, I think, is simply not correct from an economic point of view.
And perhaps if you look at trade, Professor Bhagwati, would it also be a major distortionary factor that if prices go up and so we make goods here in the United States that we, basically those kinds of jobs aren't that highly skilled in many cases, right? We might rather, theoretically, have those jobs done somewhere else so we can retrain our workforce for higher paying jobs.
Yes, well, that certainly is a possibility, and I think it could very, very well happen. I think essentially, since you're focusing on oil price increases, oil price increases have, in fact, led to a very substantial impact on the way people consume energy. And I think that the effect of that on the overall economy, I think, and on CO2 emissions, and therefore what we need to do about the climate change, etc., I think it's going to be a much more important factor than I think the issues about whether activity will go from one part of the world to another part, which is very difficult to predict.
That's a fair point. And Naomi, do you think that if prices were to come down quickly, though, it might, for other reasons, perhaps be a bad thing? All these shifts that this economy has started to go through towards alternative energy being just one could be nipped in the bud, and we could be back to our old gas-guzzling ways rather quickly.
Well, look, critics of this economic model, and I include myself among them, we have been saying that there is an environmental problem with pretending that geography doesn't matter. This is an incredibly emissions-intensive, incredibly wasteful economic model where you take, say, raw logs from Washington State, ship them for processing into furniture in China, then ship them back. In a context of climate change, it is a very wasteful model. It's a very dangerous model. And it would seem that the ecological warnings haven't been persuasive enough, but the economic warnings are persuading a lot of companies. And just to be clear, I don't think that this is going to lead to a huge resurgence in manufacturing jobs in the United States, at least not in the short term. I think what we're seeing more, and this is what the New York Times piece talked about, is a trend towards more regionalization. So within the European Union, You have companies deciding not to produce in China, but producing in Eastern Europe. And I think where this could really have an impact within the NAFTA context is that a lot of companies relocated from the United States and opened up in Mexico in the maquiladora sector, then closed those factories and moved to China.
And now they're moving back.
Maybe moving back to Mexico.
All right. Well, Naomi and Professor Bhagwati, we appreciate both of you taking the time to be with us.